is also, there it is. We've all seen this guy before.
I
It is
realized I
Uncle
forgot to
Sam.
do that beforehand. That was my bad. So we're going to start from now. But also, think of it this way. They're not going to get mad at us about the music. And last year that happened. We had to take out the music in the beginning for copyright. So we're good. So we're perfect timing.
We're good. You meant to do it. Thank you, Drew. Thank you. Yes. So on this first slide here, you see is Uncle Sam. Everybody has seen this guy. He wants you. And specifically, he actually wants your tax money specifically. Now, for all of us that have had jobs in the past when we've worked for somebody else, most of the time for taxes, you end up getting a refund at tax time, but you don't really know why that is or where it comes from. I know when I first started, before I was in taxes, before I took my first accounting course, I thought that it was all voodoo magic. Accountants were back there and you just got money because you went to the right guy, which is somewhat true, but also not. Now, when you were working for somebody else and you had your paycheck, and let's say you were making $10 an hour, you probably looked at it at one point in time and thought, well, wait a minute. I make $10 an hour. I work 10 hours. I should get $100. Why did I get 70? This doesn't make any sense. What happened? Well, your employer is actually called withholding your taxes or doing it for you. So the entire year, you are paying taxes. You just don't feel it because you're only getting 70% of what you actually earned, or sometimes less. However, when you are self employed and you are a business owner, you are responsible for paying your own taxes. You get paid first, you then pay your business expenses, and then you have to send what's left over. So that is why Uncle Sam is saying, make sure that you pay your taxes. Now, one thing that I do want to clear up, since it is Ask a CPA, I believe this is Dwight from I believe this is from The Office. I just downloaded these memes, so excuse me if I don't get my characters correct. Right? There is no such thing as a tax. There is no such thing as a free lunch. As he said, arrows cost money. Now, what do I mean by that? Is lowering. We all talk about wanting to pay less in taxes. We all don't want to pay Uncle Sam. We don't want to pay the man. I'm for that. We don't want to pay taxes. I don't want to pay any more than I have to. However, social media will make you think that there is just some snap. I don't know why I couldn't snap that loud. There's some snap of the fingers tax deduction that if I just close my eyes really, really hard and I go through the Rolodex, like, oh yeah, there's that form I signed, taxes are gone. That's actually not the case. Everything that it takes to lower your taxes takes three things: time, effort, and money, and sometimes all three combined. I know that some of you guys have probably heard me say that before. I know my lovely wife who was on here has also heard me say that, and she will say that in her business. There is no such thing as a free anything. Everything costs money. Now, this first thing that I want to tell you guys about how to prepare for taxes is it's a story of Buddy the Elf. And Drew, I'm going to want you to unmute for this one because you'll like this one.
Okay, hit me with it.
Is Yeah, as I think Drew, you'll remember this one, is that kind of going back to what I said was you are responsible for your taxes as a business owner, right? That means you have to. There's nobody coming to help you, and you can definitely end up in April and be shit out of luck or SOL. Now, Drew, I think we could probably use this person's name, right? We're not going to dox her, I think. Well, she has a pretty
I'm
common name.
guessing it's Ashley. If I had to guess,
Yes,
it's
it's Ashley.
Ashley.
Yep.
Okay, yeah, go ahead. Yeah.
Won't use her. Well, her last name changed now, but we're not going to use the old one or the new one or the original one, is how I should say it. Is we had a client, she was self-employed, and she came to us, I want to say it's probably like May of 2023, I want to say, almost 3 years ago now. And she said, I'm starting to venture out. I'm going to start working for myself, and I don't know what I'm going to do about taxes. I don't even like really know how this works. And she was just starting her journey. I think she had been self-employed for maybe a month, maybe two. And I told her, I said, Ashley, really all that you want to do right now is just put away 10% of whatever somebody pays you. So if somebody pays you $1,000, just move over $100 to a savings account, put it away, don't touch it. And if you can continue to do that for the rest of the year, I promise you, you will not be surprised comes tax time and you will have plenty of money to pay your taxes. Well, fast forward 9 months. This was now, or 10 months. It's probably in February or March of the next year. So 24. And I said, Ashley, you owe X. And Drew, you can back me up on this. I believe she almost screamed into the phone. She was like, oh my
She,
God.
yeah, she did.
And I
We have the
said,
we have the recording if we want.
you want it. And I was like, what's wrong? And she says, I have so much money. I said, what do you mean? And she's like, well, I just did what you said. I literally just put money away and like you'd be fine. And I said, yeah. And I think she ended up putting away like 30% of her money. I think she went a little overkill.
Yeah, she put way more, but still, like, good.
Yeah.
She had it, that it
Yeah.
was there for her.
And it kind of really just really solidified for myself as an accountant, for all of us who all played sports, is kind of like going back to your parents when you do your homework. Is I know our mom said this to us: if you do your homework early and like right when you get home from school at 3 o'clock, if you just do your homework, you can play video games the rest of the night. But if you wait until 10 o'clock to start your homework after playing video games all day, you're going to be in a world of hurt. The same thing here. If you guys can get ready or stay ready, you do not have to get ready. Now, I know there might be some of us on this call that might say, well, what if I like actually have like direct costs, meaning I buy a widget. This is the old Tom Woods one adage. I buy a widget, or a libertarian or any economic, not just Tom Woods, is I buy a widget for $5 and I sell it for 10. So my profit's actually 5. In that case, you would move over 10% of the net in those rare circumstances. But most of us are going to be in the professional services where we're selling our services, we're consulting. So we don't have a ton of expenses. So that's where that number comes from. But I can promise you guys, if you start putting away money now for your taxes, you will never not have money for tax. I would promise you that. I can almost, I'll bet Drew's life on that. I would do that. I wouldn't bet my wife's life on there. I bet Drew's
Thanks,
life on
appreciate
that.
it. Thank you. Appreciate the
Welcome.
love. Appreciate it.
You know, you're like the lineman on a football field. You know, you're that, you know,
That's what I am. I'm the fullback. I'm Mike Allstott. Just, just
yeah, yeah, that's what
that's
you
what
are.
I
Yeah.
get to do. I'm the lead blocker, huh? Nobody knows my name.
Exactly. Exactly. But yeah, so number one is that you want to make sure that you're putting the money away for taxes, because do not listen to anybody on the internet. I know Connor, my financial advisor, and if some of you guys are, if we end up sending people to financial advisors, I know Connor's on here. He will tell you the same thing. Taxes are coming for you, and don't listen to the BS on social media. I know he puts up with it in his line of work. I know my wife does. I know Drew does. I know Brandon here does. So make sure that you guys do that. Now, I don't. There we go. Now, this money here, now that we have saved that money, as my friend Little Dicky has said, best rapper of all time. He will tell you, and I will say that too. He's the best rapper of all time. Nobody argue with me there. Is now that we have saved that money, right? Do we just leave it there? Do we buy stuff? And we're gonna get into a little bit about how this works and how tax deductions work. Is now that we have all that money saved up, I know this will drive Connor crazy, or does drive him crazy, not what I'm about to say, is since we need that money to be fairly liquid because we have to pay our taxes, whether it's in a year, whether it's in 18 months, whether it's in 3 months, we don't want to just leave it saving active. Now, one thing that our client Ashley did was she actually put all of that money, which I think was like $12,000, she actually put it in the savings account. Now, what I would do is just a high yield savings account. This could be something as simple as SoFi that's paying, I think, almost 3.5% now, maybe four. It could be what are some other ones? Capital One, right? We want to be moving that money that you're making into a savings account and make preferably that it's high yield. Now, again, is 3% on $10,000 going to make anybody rich? No, but it starts to stack good habits. We want to be doing that. Any of your tax savings that you have, you want to be having two accounts, one business checking account and one business savings account. That's what I want to do. And just to be like Little Dicky, I can't promise that you will have models around you, but I can promise you that you will have plenty of money left over at the end of the year. Now, this next one that we're going to get into, you guys have all seen this. For those of you guys that are not Seinfeld fans, it's a very funny show. It was out in the 90s. The continue or not continuation of it. The writers of that, they also wrote Curb Your Enthusiasm. One of my favorite shows is Curb Your Enthusiasm. Seinfeld, I was not a big fan of, but I think this will actually hit this on the head. What I want to talk about here is write-offs. We all hear that term, and in my opinion, I think it is completely bastardized because people think, well, I just spend money and my taxes go away. That is part of it, but I think we've all had this conversation with, I know I've had it with clients. I think we all had it with our friends. I'm going to go ahead and play this. It's a very funny scene. It's about 30 seconds long, but I think it will epitomize the confusion of what a write-off is. And then I'm actually going to get into this and tell you guys what an actual write-off is. Let me play this, take about 30 seconds.
JT, there's no sound.
Oh, is it not playing?
I can see it. There's no sound.
Oh,
Hit the share button. Just start it over. Hit the share button,
okay. Yep.
and there should be
All
a
right.
little check mark box where you can, like, it says share sound.
Ah, Drew, you told me about that earlier, and I just completely blanked.
You're good.
Uh, how do I?
Yeah.
Oh, there it is.
Should be on the right side. It says shared.
Yeah,
Yeah,
I
there we
see.
go.
Yep. All right.
Okay, guys, ready? And take two. Ready?
Oh,
No,
sorry.
what are you
Yeah,
doing? You turned it off. I was like, ready?
I
Three,
know.
two, one, action. That's what I was gonna do.
I was sharing the wrong screen.
Oh, you're good.
All right. Sorry guys. Let me do this one more time. I was practicing that earlier, and it kind of now I'm like, damn it, I can't believe I messed that up.
BP's way harder than 7 o'clock at the first at bat, huh?
Yeah, as you guys can see, I'm a 5 o'clock All American. 5 o'clock All Americans up in here. All right. Now we should be able to see this.
It's a write-off for them.
How is it a write-off?
They just write it off.
Write it off what?
Jerry, all these big companies, they write off everything.
You don't even know what a write-off is.
Do you?
No, I don't.
But they do. And they're the ones writing it off.
Wish I had the last 20 seconds of my life back.
Now, I see Drew laughing. I can see some people laughing in there. I think this epitomizes this whole write-off thing because we all hear from our friends, oh, I wrote this off. I write this off. But what does that really mean? Because when I hear the word write-off, I think, oh, it just disappears like I'm just writing off into the sunset. But that actually couldn't be further from the truth. So I actually did lie to you guys a little bit. So there's going to be one slide with numbers, but I think this will epitomize everything. Now, this is how we are taxed as taxpayers. Again, whether this is business owners or individuals, is we are taxed on what we make. Let me see if I can. Where's the annotate? Here it is. So we are taxed on what we make. And it's really based off of a percentage, right? We all fall into different tax brackets. And again, I'm not going to focus on at what point are we in the 20% bracket? Are we married? It's more the concept here is that if we make $100,000 in income and our tax bracket is 20%, that means we pay 20% of it in taxes. So if we made $100,000 and we're in the 20% bracket, we owe the IRS $20,000. And again, this is a simplified version. I know that it's a gradual or a progressive tax system and standard deductions. We're not going to worry about that. It's more just the overall concepts that we understand. Now, in the example of Kramer, when he said, oh, they just write it off, they just write off this stuff. What does that mean? Now, in this one here, let's assume our income again was $100,000, but we found $20,000 in write-offs, basically meaning that we spent $20,000 to lower our income. And if we're in the same tax bracket of 20%, that means that we spent $20,000 to save 4 because our tax bill went from 20 to 16. So to say something is a write-off is actually a little bit of a misnomer, and I try not to use that with clients. I like to use the word deduction because you get a deduction on your income. Deductions and write-offs, they're the exact same word or synonyms for each other. However, this is how we are taxed as business owners and taxpayers. However, business owners get to deduct certain expenses. W-2 employees don't get to deduct as much or nearly enough, in my opinion. Now, I want to move on. Oh, I got to click off this marker here. Now, oh, that's why are these lines still there? There we go. All right, now that I got that. Now, the first thing that we want to talk about, as this man here is confused, is the first thing that we have to have now that we know how taxes work and how we're taxed is we want to make sure as business owners that we have what is called a separate business bank account. Now, what that means is that all of our business income that we have goes into its own business bank account. That means that if we send somebody an invoice like Ashley did in our example, they pay her, it goes straight into her business account. If she has any business expenses, such as paying their accountant what they deserve, like us, she gets to deduct that from her income. If she has to pay for tax or bookkeeping software, if she has to pay for liability insurance supplies, she pays that out of her business account. And I can tell you without a shadow of a doubt, this will help you organize your thoughts, your income, and your expenses better. Because Drew, you can answer to this before you started working for yourself with me and together, is if you were mixing your, or actually I'll tell you this, in your personal account, how hard is it to go back and look backwards to see like what you spent where? Is that very easy or very hard?
I'll give you an exact answer. So last year, I actually got Quicken Simplified. It's like personal budgeting, basically. And I did it like in, let's say, September. It took me like 9 hours to go back because it connected to all my accounts and it had all the transactions. And I tried to put like, oh, this one was groceries, this one was like Uber or whatever, travel. Like I tried to do it and I'm like, oh my God, this is taking forever. And I only have one, this was personal. I only have one business account or one personal checking and one personal savings. It took me forever. So like, yeah, and don't forget, I do this professionally, and
do?
it took me forever to do it. Like that's
Yep.
yeah, it's not fun. It's not fun.
You, you say you're not an accountant, but you actually have a Google review on our Google review that says you are. So
Well, sure.
somebody thinks they are.
Thank you.
But the point, thank you for that. But the point, as Drew is saying so eloquently, is that you want to be having a separate account because, again, if you know as a business owner, you're taxed on what is left over. If you do not have to sift through it and add stuff and subtract stuff, it makes it very hard. When you have one business bank account, it makes it easy. Basically, the opposite of what this guy's face is. Now, we might be wondering as we're getting to the end of the year, all right, JT, I know what my business made. I know I'm in the 20% tax bracket. I know I'm taxed on what's left over, all my business income minus all my business expenses. How do I actually pay less in taxes? Because, yeah, I've got $80,000 of profit left over, but that $16,000 bill, that's kicking me square in the groin. That kind of hurts. What are some things I could lower it? Now, as this meme here says, doing things ahead of time, that is so smart. Now, what I mean by that is we all have recurring expenses in our business. Like, for example, I rent this office every January or January 1st, every first of the month. I have to pay, I think it's $800 a month to rent this office, right? I know that thing is coming every single month. It's coming like a Dodgers World Series. You just know it's going to happen every single year, right? And we all have all kinds of expenses. That could be rent, that could be our software subscriptions, right? Now, what I mean by doing things ahead is literally prepaying your expenses, right? So if you were at $80,000 in that example that we had there, and you know that you have $5,000 of monthly expenses coming up in January, you can actually pay those in January or in December and get that extra write-off. We want to be speeding things up. That's what I mean by doing things ahead of time. Now, if you want to supercharge this, you can actually pay for non-recurring things ahead of time. What do I mean by that? For example, if I or my lovely wife, I'll spoil some of her plans. She's running a big race in April of this year. A big race. I'm not going to say where it is, but it's a big race. And we already know that we're going to go to wherever it is. We have plane tickets, we have hotels, we have what else is there? Ubers, car rentals. So instead of waiting, and by the way, she's a personal trainer, so she can deduct all of this. Instead of waiting until April to do this, she could actually book it now in November or December, get that deduction, and lower her taxes for the next year. So again, we want to be doing things ahead of time, and it all builds upon itself. If you have everything in one bank account and you're tracking where everything is going, you will know exactly where you are, and it's very easy to think of those things ahead of time. Now, if you want a bonus point, why yes, I'll put that on my credit card or my Amex in this case. I'll give you guys actually one better. Is whenever we put stuff on a credit card, like the ones that I have in my hand, this credit card, right? If I go to dinner tonight and I pay for something on my credit card in November, it's most likely not going to be due until sometime in December or maybe even January. With taxes, most of us are what's called a cash basis, meaning that when we pay for something, it is deductible in the year that it's paid. Now, on a credit card, if I buy something on my business credit card in December, but that bill maybe isn't due until February, it's still deductible because it's deductible in the day I swipe my card, not when I actually pay the card. So if you guys want bonus points, you can actually pay for stuff in December on your credit card and not have it due for another 4 to 6 weeks. And if you have an introductory credit card, which a lot of them do, if it's 12 months interest free, you may not have to pay that back for a whole year, maybe 18 months. I think we had a Chase card that was like that. It was 0% interest. What was it, Drew? I think was it 12 months or 18? I can't remember exactly.
12 months, because the 12 months just ended now in November. That's why I know.
Okay, well,
And we paid it off in time. So
then
I
it was
know.
12, right? But the same thing going back to that savings account one, you could put that money that you know you're racking up in your credit card, earn 3% interest. Why not? Now, the next thing that I can tell you guys without a shadow of a doubt, again, is one of the things that I am big on is you want to be spending money on things that you know you need. For example, prepaying expenses. You know you're incurring that. I will never tell somebody, like on TikTok they do, go out and buy a car to lower your taxes. You could lower your taxes, but you also have a payment for a car that you probably don't want. And that's just burning a hole because, as we showed on there, you really only get to deduct what your tax bracket is. So if you're in the 20% bracket, every dollar you spend only saves you 20%. Not a great ROI. So we want to be looking for things that we are already going to be doing or should be doing. As we said in the first one, you want to be prepaying for things that you know you are going to incur. Now, the next thing that we want to do is be able to fund our retirement account. If you talk to anybody, who knows if Social Security is going to be here in 10 years, 20 years, 30 years, right? We don't know. We have no idea. I don't have a bat line to the Senate or the IRS. I don't know where that's going. But I do know that I need to put away money into a retirement account. So you can actually fund money from your business. Well, I guess it's personally a draw, but money that was in your business, you can put that into a pre-tax retirement account. Think of things like your IRA, individual retirement account. You could start a SEP, a solo K. I know Connor's on here. He is definitely an expert. And if you guys do need help with any of your financial planning, please make sure to reach out and message him or reach out to us. We'll put him in touch with you. But I know Connor can attest to this. We try to have a lot of our clients put money into retirement accounts because it's something you were going to do anyway or should be doing at the very least. That money gets deducted right from your taxes, from your federal and state taxes, and sometimes your self-employment taxes. But again, we want to be putting money away into retirement accounts that can help you tax-wise, whether you deduct it today or you can put it in a tax-free account forever, such as a Roth IRA. Connor, I will get to you. Let me finish these. We got about maybe 5 to 15 minutes left, and then we'll have, because I know Connor is definitely a retirement expert. And again, I just tell you guys what it does for you tax-wise. There are so many different retirement accounts. There's simple IRAs, SEPs, 401ks, all that stuff. It's more so I want you guys to know that putting money away into retirement not only saves you in taxes, but it also sets you up for a better future. Now, this next one here that you see is going to be a doctor. You guys might be wondering, a doctor, are my medical expenses deductible? Yes, they are, but you got to spend a lot of money on medical expenses. Why I have this up, you want to have what's called a health savings account, right? We all want to save money for a rainy day, for medical emergencies. One of my family members, he had a really serious medical emergency last year. And if he had, or I'm assuming he had an HSA, but let's say he did have an HSA, you are allowed to put money in that account every single year. This year, I believe it's 4,300. If you're married, I think it's actually 8,550. Why it's not double, I don't know, but for some reason it's not. But you are able to put money into a savings account that is earmarked for health-related expenses. Think if you have a copay, if you scrape your arm or you break your arm and you go to urgent care and you have to pay anything out of pocket, you get to use that money that you've put away into a savings account. Putting the money in is tax deductible. Taking the money out is tax-free as long as it's used for medical expenses. Now, why I like that so much is that obviously you can just put it in a savings account and it just sits there in cash. Or you can actually invest it into the market. You can buy index funds, you can buy mutual funds, different stocks. I guess you could day trade if you really wanted to. And if you put it into the market, pretty much every year, as long as you do it smartly, Connor will back me up on this or echo this, is that you can expect to make about 8 to 12%. Some years are going to be more, some years are going to be less. That money can grow. Every year I do try to max it out. I have maxed it out this year for 4,300. Hopefully that money will continue to grow. And I will actually tell you this, as I've withdrawn on it every year, the amount of interest and growth that I have, it will continue to grow forever. And hopefully I don't have to use it and need a really big medical emergency. But again, this amount does take money off the top, kind of like that example before. If your income was 100,000 and you put away 4,000, your taxable income goes down to 96,000. Same idea there. That is what a deduction is. And again, we want to be using it on things that we would already be using, right? We need to be saving for healthcare, whether that's this year, whether that's in our retirement age. We need to be putting money away into a retirement account. Again, whether that's a solo K, IRA, SEP, all of those, we want to be doing that. And we're going to have recurring business expenses. Let's pay those up front. Now, as Peter Griffin would say, that was a mistake. What are some of the mistakes that I see a lot of clients or taxpayers do? Number one, Drew can attest to this. Kind of what we talked about before is commingling your funds, not having a separate business bank account that has all of your business expenses. We have clients every year that commingle their funds against our advice, but again, we can only lead. Can't make a horse drink the water. We can only lead them to water, right? Can't make a horse drink. You can only lead them to water. And I will tell you that every year, their taxes for them are a pain in the butt. They complain about it. Oh my God, how do I know what's tax deductible? How do I know it's not? And I'll say, well, if you were here on Ask A CPA night or you answered any of our messages asking us, do you want to talk? We'd make it very easy for you. Now, again, that's one of the biggest mistakes that I always see. And another one that I always see is you never really get ahead of anything. And what I mean by that is every year for a lot of our clients, we're doing what are called tax projections. And every year they look at us like this, maybe not as skeptical as this kid does, but they give us that same reaction like, wow, this was actually really simple. One of the biggest mistakes that I see taxpayers make every year is they do not calculate their taxes in the months of October and November, or even a little bit before that. Now, the reason why I say this is that we are offering this right now to our clients, tax projections. I think some of us that are on here have actually taken us up on that. And I know actually Drew's tax projection, we're going to be meeting later this week for him, and I'm going to do my own tax projection, is one of the benefits of doing these is it's kind of like a mid-year check-in, right? It's like take it as like an x-ray for your business. You know where you're at tax-wise, and we project it out. And every year, and I think one of our clients, their names are, I won't drop their name. It doesn't matter. But every year we've been doing their tax return now for 2 or 3 years. And that's one of the things I actually look forward to. It's like, wow, I feel so good knowing what I'm going to owe a year ahead of time because it allows me to save for it. It allows me to start spending strategically, kind of like we talked about. And it just overall makes it easier for clients. And I think that's one of the biggest mistakes is not knowing where you're at, because I can tell you is that if you would go on TikTok or social media or any other BS site, they will be telling you to spend all of this money like crazy, go out and buy cars, go out and buy jewelry, or no, not jewelry, go out and buy equipment, all this heavy stuff. And when in reality, we could tell them, like, actually your taxes aren't going to be that high this year. I'll tell you an example of a client. They were able to qualify. They had some net operating losses year over year, and they just built up at about $100,000. And the first year, or Drew, I'll tell you, his name's JP. 1 year is that he had a big profit. Is actually this year he had a profit of about 120,000, and he's like, "Holy shit, I'm gonna get smacked in the face. I don't know how I'm gonna pay this." And we actually did a tax projection for him a year ago today in November, and I said, actually, JP, like you have this big NOL, you don't owe anything. He's like, "Get the hell out of here." And he's like, "Man," he's like, "You saved me." He's like, "I was about ready to go out and buy a truck." And I said, "Wow, I'm glad I stopped you." Because he's like, "Yeah, I saw on social media that if I buy this heavy truck, I get to write off this, this big depreciation and all this stuff." He didn't even know what the word meant. And he said, "Man, thank God that you told me that, because I was about ready to go borrow $112,000 to buy this truck." And that's one of the things that I want to leave you guys here with, and I'm almost about ready to wrap up, is one of the biggest mistakes that you guys can make is obviously commingling your funds, but one of the other ones is not simply asking for help. And we always tell clients till they're blue in the so at least till I'm blue in the face, is if you have to think more than 10 seconds, ask us. Don't, or now the word is chat GPT, but I used to tell people, do not WebMD your taxes. You have us, we reach out to you guys all the time, is do not WebMD your taxes. Because I can tell you, if you WebMD the cough that you have, you will be convinced that, I'm feeling a little under the weather. I have this cough. If you go WebMD it, you're going to think you need to amputate your arm because you have cancer. You're like, I'll tell you guys, go down rabbit holes. Just ask us. That's one of the biggest things you guys can do is ask us. That's why we put on events like this. That's why we use TaxStone to stay in contact with you so that we are always top of mind. But most importantly, so you guys can get the best use out of us because we are not the cheapest option. And we want to make sure that you guys are getting the bang for your buck. And as our friend Robert De Niro has, as again, you guys promised, got about 30 more seconds left, and then I will answer any questions that you guys put in before tonight, and then also anything that you guys have in the chat, is we want you guys to think of us like Robert De Niro. I know some guys. I know one of my buddies, I do his taxes. His name is Eric. Every single year, he loves to tell me, he's like, man, I love telling my friends, oh, my tax guy does that. I have a tax guy. He just loves to say he has a tax guy. So as Robert De Niro says, I know some guys. We want you to think of us, JT and Drew, and also one of our accountants who's not here right now, Jelly. She's part of the team, and Yi and CJ, who end up showing up in tax time. We want you guys to think of us, whether it's any tax questions that you guys have, whether it's any just any question you guys have. Please do not hesitate to reach out to us. Reach out to us in TaxStone, give the office a call. Please ask us any questions you guys do have. Thank you guys for coming tonight. And with that, I will turn it over to my partner, Drew, because I do think we have some questions. And then any questions that you guys do have that are here, please ask us.
Cool. Awesome. Well, thank you, JT. Appreciate it. And you could probably stop sharing the screen and whatnot, so then people can look at their guys, as you said, have us up front
Yes,
for
thank you.
everybody. But yeah, so thank you guys for being here. We are going to take some questions right now. And I guess I didn't say this earlier. You probably figured out we are recording it. I mean, I'm sure you guys heard it when I clicked it on at the beginning, of course. But yeah, I don't know if we're going to put this on YouTube yet or Instagram, what we're going to do with it. But yeah, so some of the questions, even though people didn't show up, we are going to go over them. It's probably better to start with the people that are here. So let's do this. Connor, I know you had your hand up earlier, so let's start with you. And then I know Brandon, you submitted a question as well. So yeah, we'll start with the people here, and then we'll kind of move on to different ones as well. So yeah, Connor, go ahead and unmute yourself, and then hit us with it. I know you wanted to add something when we were talking about, or when JT was talking about like, the retirement and that section. So yeah, hit us with it.
Yeah, it was just a section to add with the retirement. In addition to like the tax deductions, one thing that I've always told clients that's generally a little bit better when you're doing a retirement deduction as opposed to like writing off a car or something like that. When you get your business income down by all these miscellaneous deductions that affects your lending,
Yes, it does.
retirement deductions do not. So I just always make that's an important distinction as a business owner, right? Like if you decide to deduct $20,000 into like a SEP IRA or something along those lines, it does not necessarily negatively hit your ability to get money from a bank where like if you write off your car, it will. I was just gonna add that.
Oh, yeah. Thank you for saying that. And actually, something I forgot to add that I tell clients is if you go out and buy a car, right? Cars depreciate. I should know. I just bought it, or it's a used. I bought a used car this year. That thing lost value, probably another 20%. The second I even probably second I even sat in there, it just depreciated. However, if you put money into a retirement account, as eloquently as Connor talked about, how it doesn't impact your ability to borrow, or as I like to call it, the cost of acquiring capital, um, in your retirement account, that one will not, or it can lose value. It's very rare that it will. You're if assuming that you have a good financial advisor like Connor is the best and the only one actually that we recommend people to, um, is that retirement account should go up in value 8 to 10%. So when you pull that money out in 20, 30, 40 years, whenever it is, that money should have probably doubled, if not quadrupled in that time. Whereas the car that you bought is probably in the bottom of a junkyard. So that's why all deductions are not created equal. While they do equally lower your tax in that year, long term they are not equal. So thank you for adding that, Connor. I forgot to mention that it does not impact you negatively in your cost to acquire capital. Thank you for that. That's why we only work with Connor. He's the best.
So yeah, any of you guys, if you are looking for a financial advisor, obviously you can just message him now or or message us. We'll connect you with them. But yeah, and funnily enough, in the digital world, Connor and us have met multiple times in person, not just on the internet. We're all real people. He's pretty jacked too. We'll say that. But yeah, okay. I'm gonna try and change. I don't know if how this works exactly on Zoom,
Oh,
where if it's like showing everybody or if it's just gonna show the
okay.
people who are speaking on the recording side at least. So I'm gonna try it on my side and
Okay.
see if it affects it. So give me 1 second. There we go. Okay, cool. So we'll try it that way and kind of see what happens. But yeah, okay. Thank you, Connor. Appreciate it. And to add on to there was one client we work with who he wants to get a loan, and that was actually something he was asking us. He's like, "Is there a way we could show more money so that he can get approved for it?" Yeah. So completely understand where you're coming from. Like anything, guys, it depends. This is why you need to talk to your financial advisor, your tax advisor, like, throughout the year, at least one time outside of busy season is what we usually recommend. At least one time for things like that. So yeah, okay. Let's go with Brandon. Brandon, I have your question up on here, so I'll read it out loud, and then you can unmute yourself and pop up here as well if needed. So Brandon submitted the question for you, or I guess for you, JT, for all of us, but his question is there a tax benefit in claiming direct costs of goods sold versus contract labor? And the example is a porta-john rental for a construction site. Would that be contract labor or cost of goods sold? And is there a tax benefit categorizing it as one versus the other?
Yeah. Great question. In terms of a tax benefit, it does not matter if you put it as contract labor or cost of goods sold. There is no difference. It's going to lower your income either way. Because again, as a business owner, you're taxed on the bottom line. It does not matter if that expense is at the bottom of your P&L in QuickBooks or at the top. It all ends up being the same. Now, in terms of it for tax wise, it does not make a difference. Now, internally, I would actually tell you to basically any type of labor or any type of expense that you can directly tie to your income, I would make it a cost of goods sold. And I'll tell you what I mean by that. For example, I'm going to take us, for example, right? We are tax accountants. We don't have any tangible services outside of like preparing tax returns. So like when we have expenses like Zoom, right? Obviously, or yeah, like Zoom, right? Obviously I pay, I don't know what we pay. It's like, $50 a month, or it's probably not even that high. Let's say it's $50 a month, right? It's kind of hard to attribute that to like one specific client because we take sales calls with those clients. We do free events like this, but then we also have paid consultations. So it's kind of hard for me to sit there and say, well, all right, I know Zoom, that's a direct cost because it's like sometimes I make money with it, sometimes I don't. However, my tax software that I pay for, that is a direct cost because I would not have that software if I didn't have to file a return. So if we decided to change our business model and say, yep, we're not filing tax returns, we're just going to advise people and I don't need Drake, well, then I'm not going to incur that cost, but I'm still going to incur Zoom because I'm going to need it. So, Brandon, hopefully that makes sense. Drew, if you could unmute him, or if he is, Brandon, go ahead. Or does that make sense? Or does that kind of help answer not kind of, does that help answer the question that you had?
Yeah, I appreciate you taking the time to do this tonight. But yeah, I think
Yeah,
that pretty much answers it. So basically, is I'm understanding that it really doesn't matter at the end of the bottom line. It's more of a just how are you accounting for it in QuickBooks or whatever the tax software is for.
correct. It's now you do want to be using now me and Drew, like obviously we use QuickBooks for our own business. We use it though a lot of times throughout the year. It's not we use it daily, but like we'll look like I'll want to look at okay, how much did we spend on advertising at this specific conference? So you want to think of quick and right as you beautifully said, in the tax at the end of the day, it's just what that bottom line is. Whether you put it at the top of your P&L, at the bottom, it does not matter. We just want to know what's left over. Now, for you, you might want to look and be like, wait, how much did I build? Because I know you have a lot of direct goods. Like you're not going to buy something unless somebody pays you for it. So for you, I would actually say it probably makes more sense to move it above the line if you understand what I'm saying, because you have a ton of direct expenses. Like you probably wouldn't was it a porta-john? Is that what it's called?
Yeah. So like by code, you have to have a porta john out there for the subcontractors to use.
Yep.
But I'm like, well, it's not really contract labor because they're not really doing anything, but they are providing this. So I was like, I just don't know how to categorize it.
Yeah. I would in that case, do you use the same porta-john or do you get a new one each, or like how do you only get it when you need it, or like do you store it
I
somewhere?
There's a just like a porta-john service, like a plumbing company or whatever, they provide it, and it's dropped off per job. So I'm not
Oh, okay.
using that porta-john on every single job. It's just tied
Mhm.
specifically to that job until that job is
Gotcha.
finished and then it goes away.
Okay. I see. It's not technically a cost of goods sold in the traditional accounting gap sense, but I would tell you, like, as you're tracking like what your costs are per job, right? Because you're billing it to the client,
Right.
I would actually tell you internally, you probably should use it as a cost of goods sold. It's not contract labor, it's cost, right? Because you wouldn't, like, as you said, you would not incur it had you not had that job, had that specific job, right? Like, let's say like in December, you have no jobs. You're probably not going to be ordering porta johns. I'm going to guess that's right, correct?
Right.
Yeah. So that, again, internally, I would tell you to put it because again, you're using QuickBooks for yourself, right? You're not using it for me and Drew or for the IRS. You're using that to make your own business decisions. So I would say, however, it's going to help you make a business decision, that's the expense you should use.
Gotcha. I appreciate it. Thank you.
Yeah,
Absolutely.
you got it. And Brandon, yeah, that's a great question. I'm just going to add on to kind of echo what JT said. And obviously we know because we've talked to you before. So anyone listening, if we don't know you, then I guess take it with a grain of salt. But for you, Brandon, and it does extend to anyone else in a similar situation. Yeah, accounting. Use it like internally, like JT said, how to make decisions. So I'll give you an example. For us, like we on our P&L, we have like tax returns, individual tax return, business tax projections. Like we break it out by service so we can kind of see how how much we're making, who's benefiting from it. And then on the expense part, a little bit lower, right? One of them, for example, we have this year's advertising. Like we had a separate line for a conference we went to. We have a separate line for Facebook ads because we want to track those for how we're using those. So same thing for you. Like JT said, tax wise, it's all just whatever's left over. But accounting wise, internally, it's going to help you make decisions. All right, is this Porta John company too much or too little? Should we look for a different one? Kind of how much does this job cost? Am I over budget, under? It's kind of things like that internally. Yeah. So great question there. Okay, cool. And then for you guys that are still here, if you have other questions, throw them in the chat or raise your hand. We'll start to go through the ones that were submitted by people that didn't show up, which totally fine. It is what it is. But yeah, okay. So JT, Jim submitted. This is well. I know why this. It's funny to me and you. So he says, "What changes in the big bloated bill?" Of course, he means the big beautiful bill. That's on brand for Jim. Love it. What changes in the big beautiful bill will impact his business, or in parentheses, the majority of people on the call? So I'll kind of give an example or I'll speak to Jim directly, and then it'll kind of work for a lot of other people as well. Jim happens to be in Texas, which is a state without state taxes. So for him, there's actually not as many effects as some other people. One of them is, and JT, I'll let you explain after, about state taxes. He also does not own a restaurant, so it's not like he's getting tips. So that one's not really going to affect him. So Jim, unfortunately, when you do listen to this, you actually are not going to get that much savings. Unless there's something that changed that we don't know about. But what we do know of your business, probably not going to have that big of an impact on you, unfortunately. So good question. But yeah, JT, I'll let you kind of expand on those for just kind of more
Yeah.
general. Yeah.
Yeah. I don't get the sense that Jim is going to move to California, a high tax state. I don't get that sense.
No, probably not. Or New York. I don't see him doing that. Him
Maybe.
personally, probably not.
Probably not. But as Drew said, with the one big beautiful bill, that was a bill that was passed, oddly enough, July 4th by President Trump. There was a lot of stuff in there, but I have a single track mind. I only worried about the tax stuff that was in there because, in my mind, the only two things that exist, or three, are my wife, taxes, and baseball. Maybe four would be salsa dancing because I actually really like that. Those would be my top four. But so everything out, if you ask me anything outside the tax part of the one big beautiful bill, I don't know. But in terms of what we've been telling all of our clients is that the changes within the law are not going to impact your they're not going to impact your day-to-day or your spending habits. Now, what do I mean by that? As Drew talked about, is if you are in a tax or in a state that you have to pay a lot of income tax in California, New York, Connecticut, Illinois, Massachusetts, Um, any state income taxes that you pay before the one big beautiful bill between 2017 and 24, you were actually capped. So if you were only able to deduct $10,000 of state taxes. So if you were in a state like California and you pay astronomical property taxes, income taxes, local taxes, car tags, let's say you paid $50,000 in state taxes in California. Well, on your federal taxes, you can only deduct 10, so you're capped. You would lose that 40,000. However, in the one big beautiful bill, they have raised it to 40,000 now. Now, again, why I say you wouldn't have changed anything, you're not going to say, well, oh, now I'm going to pay a bunch of California taxes. That's what I was waiting. Right, you're going to pay them. You're just benefiting from a law change. Some of the tax brackets actually went down. So your taxes should go down this year compared to last year. Again, it's not changing anything. It's just the sliding scale. They moved up or down depending on which way you look at it. So most people's taxes, unless you're in the 32% bracket, they're going to be going down. The QBI deduction got extended, so you're still getting that. That's a different type of deduction, right? So it's not changing your behavior. Your car interest is, if you have a personal car, it is potentially tax deductible, assuming that your car was manufactured in the US. And the way you would know that is based on your VIN number. I believe it's numbers one. If your car starts with a 145, that means it was manufactured in the US. And as long as it was a new car, and it has to be new to the world, so it can't be a new used car. If it is new to the world and your VIN number is a US VIN number, you actually get to deduct the car interest that you are paying on that. So that's a little bit different. So if you wanted to get a car and you felt like paying very high interest, I have a car payment now and I hate it. And it's not worth the tax savings at all. But that would be one if you want to go out and buy a new car. Starting in 2026, you get a little bit better charitable deduction. So basically anything that you deduct or donate to charity is starting in 2026, you get a little bit better deduction as a above the line deduction. I'm not going to go into what that means. And then also one of the big ones is equipment or big purchases. Think like heavy car or anything over 6,000 pound car, equipment, well, maybe not rental properties, but basically big equipment. The way that it used to work, or the way that it works is, let's say I buy a car for $50,000. According to the IRS, I couldn't deduct all of that 50,000 in 1 year. I had to deduct it over 5 because they say cars last 5 years. Why 5? Because that's just what the IRS says. So I'd have to that $50,000, I'd have to deduct it $10,000 at a time. However, in the one big beautiful bill, they extended what's called bonus depreciation, where you can actually take that entire $50,000 car or heavy truck over 6,000 pounds. You can actually deduct it in the first year, whether you borrowed the money, whether you spent it cash. So that'd be one. So if you are thinking about getting a car, you get a little bit extra deduction. But as I always tell people, do not let the tax tail wag the dog. Those are the biggest changes that I can think of. There's obviously some small ones like tips, as Drew said. However, I don't think all of us are now going to say, you know what, I'm going to quit my cushy salary job and go work for tips because I don't pay taxes. Right. So it's not going to change anybody's behavior. It's just giving you tax breaks for things you are already doing. And it's probably most likely not going to encourage you to do anything. Maybe buying a car that might encourage some people a little bit, but everything else, you're pretty much going to get those.
Yeah. Now, just as a reminder for everybody, we accept tips, we accept donations and more money. So we will take all of it. If
We'll
you have if like JT was talking about earlier, if you have a 16 or what was it, a $20,000 tax bill, and you want to save 4,000 in taxes, we will take $20,000 from you. We will happily take that. Cash. No, I'm just kidding. But yeah. So yeah, great question, Jim. Thank you for that. Sorry we didn't get to see you on this one tonight. Something came up, whatever, all good. But yeah, and like I said, for the handful of you that are still here, if you have other questions, throw them in the chat. We'll go over them. We got a few more here on the list. We'll pull up Deanne. I really wanted to say D nice, and I was like, nah, don't I? So Deanne's question is, or I guess here it is. Tax implications and requirements for hiring overseas contractors. Great question. I'll actually go first because our accountant, she lives overseas, and it's an expense just like anything else. Just like you pay a contractor in America, you pay a contractor over there. Now I understand, every industry, maybe there's some like legal things you have to do, whether you disclose it to people and then, oh, Connor, all good, you got it, man, thanks for coming. But yeah, if you have to disclose it, that's more of like an industry or legal thing. But tax wise, yeah, It's an expense, it's labor. And here, I'll just tell you how we do it. We've tried paying through Gusto just throughout the years. We've tried, or the payroll processing company, right? We have that for our payroll, and we just pay our contractors there in the U.S. We've tried using Relay, which is our bank account, and it's kind of expensive to send overseas, but it can be done. And then the other one is an app called Wise. It's kind of like Zelle, but just, I guess, more of like a world one where people can send money overseas and it transfers. So that's what we do. Just once a month, we pay her that way. And, you know, it's, yeah, we don't know how Philippine taxes work, so it's on her. She got to figure it out.
Yeah.
But yeah, I mean, but in the US, right, like it's an expense, it's labor. Yeah, just it is what it is. And so the same thing for, I guess, for Deanne's question, but any of you, if you're hiring somebody, you know, the hardest thing is kind of figuring out how to pay them. Like if you're going to do Wise, if you're going to do a bank transfer, if you're going to use Gusto or ADP,
Yeah,
that's kind
PayPal.
of the PayPal, exactly right. That's probably the biggest thing. And cost, right? Each of them is going to have a different cost associated with it. So that's the biggest thing. But yeah, when it comes to your business, it's just an expense for labor, just like anyone else would be. But yeah, okay. So that's my piece. JT, go ahead and throw in anything else.
You hit it on the head. The one thing I will say, and I should have written this down before, you just have to have them fill out, I believe it's a W-8 BEN, I think. It's basically a W-9, but just for foreign people. You have them fill that out, and that's really it. As Drew said, if they're foreign labor, then they pay their own taxes. Yeah, like, one of our wonderful, well, I used to say bookkeeper. She's an account, soon to be tax accountant now. She's killing it. I wish she was here to hear me say that. But Jelly, we pay her. As Drew said, it's a deductible expense. It goes as a contract labor or contract wages on our books, and we get to deduct it. And then, she's on her own for taxes in the Philippines.
Yep. And you know, the big thing here, or a big thing that we do is, right, we do have a contract with her. You know, like it lays out, you know, the expectations, her pay, vacation, everything has to stay private, client info. Yes, like I mean, you know, we treat her just like an employee here. It's just that she happens to have a bank account in a different country. Like, who cares? So yeah, same thing for you guys. So yeah, good question, Deanne. And especially nowadays, right? A lot of people are hiring overseas, whether it's on Upwork, Fiverr, directly. You know, there's obviously headhunting agencies. So yeah. Okay, cool. Next one we have from Lakin and Jake. All right. Here we go. And theirs is about a rental property, so it's a little bit longer. So it says here, just new to filing for real estate business and rental properties. So just what we need to prepare and any tools that can help. We've been trying to keep track, but also it's a lot. So just want to be proactive and start now with organizing what we will need. Yeah, absolutely. So great question for Jake and Lakin. And I guess I don't remember if they had last year. I don't think they did. I think this will be new for them. But this will be for anybody during tax season, right? If you don't have QuickBooks or you do your own accounting on an Excel sheet, totally cool. What we have for people, and especially in rental or people with rental properties, is when you fill in your organizer during tax season, there's a link that says, oh, for your rental property, please put your income and expenses here. It's like a Google Doc or a Google Sheet. You just download it and it has all the lines like income and then expenses, like, and it has them listed out, and you basically just enter them. So what I would say for Jake and Lakin, and obviously we'll message them this after, but yeah, I would say just use that and start calculating things, or I guess you could wait. But that's going to be the best one. You know, it's going to, like we talked about earlier, it's going to suck to have to go back to January and calculate everything. But if I had to guess, right, each property is probably just one or two deposits a month, and then however many expenses, probably not too many. But yeah, that would be the biggest thing, is to use the Excel sheet that we have, and just start tracking it now. So good question. JT, what else would you throw in there?
Yeah,
And again, I know their question's a little long, so if you have to reread it,
yeah,
all good.
that's okay. No, I kind of got, yeah. How do you track your expenses for your rental property? To kind of go back, what we talked about earlier was having a separate business bank account. Because as Drew said, especially for a rental property, they probably don't have that much, right? They probably have one deposit a month, for the rent that their tenants pay them. They pay the more, or Lakin and Jake probably pay the mortgage, and then maybe they probably pay the insurance once a year. maybe a handyman every once in a while. So like there's really only like 4 or 5 expenses a month at max. However, as we talked about, if they are putting it into their personal account that their paychecks go into, that their daycare, like you're now you have to look at through an account like, okay, I'm looking for 4 every month, but I got to throw out 30 of them. That's a nightmare. Now imagine if you just had all of that stuff in one account. It'd be a lot easier to code 30 or let's say it's 4 a month. It's a lot easier to code 50 than to have to throw out 1,000. Like that's like, you know, so it's the same thing there. As I would tell them, really just make sure that all of your expenses and income goes into one account for the business. So you pay the mortgage out of that account, you accept your rental deposit or rental income in that account. And if you do that, I'm telling you, you'll be 50%, you'll be 50 times, 50 times better. I almost said 50 something else. But it works a lot better. But yes, great question on there. And then yeah, Lakin and Jake, we'll see you guys in tax time. And again, if you have any questions, please let us know. But I will actually promise you, if you follow those, your tax season, that can be very, very easy.
Cool. The next two on here, I think, are jokes, because there's no question. All it says is, I need a strategist. So we're gonna skip that one. But there's on there twice. So either they said it because they thought it was funny, or maybe they're being serious. I have no idea. But anyways, yeah. So those are the submitted questions that we've had tonight. So thank you guys for sending them in, and then also for bringing them up here. I know we lost Connor; he had to take off. Somebody else joined in the beginning, like before we even started, when the
I think
music
it was
was playing.
It was Deanne actually.
Is that who? Oh, I thought I. Oh, okay. Oh,
Started with
I
a
thought I
D. I
read.
know that.
That's why I thought it was a different name. It doesn't matter. But anyways, yeah. So I know we've lost a couple people. So the ones we have left, Bethany, if you have a question, obviously let us know. I'm gonna guess that since you have direct access to the source every day, I think you're probably tapped out on tax questions. But if you have one, go ahead. And then Brandon, kind of same thing. If you have another tax question, come on up. But yeah,
And then yeah, we'll probably hang around for maybe another 30, 40 seconds. And
Yeah, I did have
oh yeah,
one.
go. Oh yeah, go for it. Yeah.
So I know you talked about kind of in the beginning, let's say you paid $10 and you bought the widget for $5. So really you only made $5.
Yep.
Okay. Later on, we talked about buying a truck, and let's just say the truck was, for simple purposes, 50 grand, and you're only
Yep.
really able to deduct a certain percentage of that. How do you know which ones you're able to deduct directly to show, like, I did a job for $100 and I spent $50 in materials, so I really only made $50 versus those kind of like big ticket items where you're only able to deduct a certain percentage?
I mean like the well, what would be an example of something like be a percentage deductible?
I guess I may be phrasing it the
That's
wrong way,
okay.
but
That's all right.
basically, if all right, well, it's easier for my line of work. If I got a
Yeah,
job
yeah,
going
yeah. Use your example. Yep.
and I pay, let's say I'm making it's 100 grand for the whole job,
Hmm.
and I really
Okay.
have, say, $80,000 worth of expenses, and I'm making
Okay.
$20,000 off this job.
Yep.
How do you know that those $80,000 were direct expenses to show, like, I didn't really make 100 grand, I only made 20 grand, versus going out and buying a truck or something of that nature where you don't get the dollar for dollar amount on it? How do you differentiate
Oh, gotcha.
between those types of items?
Gotcha. So let's back up to the direct costs. You have the job for 100 and you have like 80 in materials, labor, supplies, all that. So you know that job you're going to walk away with $20,000 when it's all said. Like you know without a shadow of a doubt you're going to walk away with 20.
Right.
Um Now that example that we use, client Ashley, we use that because kind of like you said, you're not like really sure. Well, it's like, well, what if I've got like something on the side and I don't really know? The reason why we like to go with that 10% number of your income, or in your case, or cost, your like gross profit in your case, is 10%. It's just an easy number to calculate. So, if you have $20,000, you just move over 2,000. It's just an easy calculation. And kind of like you said, like with Ash, like, it's always like a moving target. So it's very hard to say like, well, I might have this expense now and this expense later. It's kind of hard to guess that because even me as an accountant, I don't know all of our software subscriptions. I've got a pretty good idea of them, but there's a lot of them that I'm going to miss off the top of my head. So we always tell, especially in your case when you're just starting out, I would rather you, Brandon, over save for taxes because it's a lot easier. Let's say in April, like, oh, my tax bill was only 1,000, but I saved 2,000, right? It's a lot easier to adjust down, right? It's everybody's cool. It's now what happens when it's like, oh, that tax bill was 10,000 and I thought it was two. I'm in a world of hurt, right? So we're taking a very conservative approach to that. And again, that number about moving stuff over, it's not to like be set in stone and be like, all right, I have to move over the exact decimal point. It's more like let me just kind of start to guesstimate this because I do that with my checks. Like when I pay myself, or like I move money over into a savings account. I do that myself. I know Drew does that. I know Connor was here. I know he does that for his clients. So again, Brandon, it's more of just like a gauge. It's not to sit there and like, like look at like be like super accurate. Does that make sense?
Yeah. Yep.
Yeah. So that's what I would say for you is try to do it off that gross amount, and then obviously like you're keeping track of your QuickBooks. You'll know what your bottom line is. This
Right.
is more for people that are like just like you're very organized. I know you may not feel like this, and I know Drew will say it. You're actually very organized compared to like most business owners that have been doing this for years. Like you would be shocked at like how organized. Like I could, well, if I wouldn't go to jail for like exposing people's identities and lose my license, I would show you and you'd be like,
Don't do
holy
that. Don't do
no,
that.
don't do that. No. My wife is no, she wouldn't like that if the paycheck stopped rolling in. It's very conditional. Is is Brandon, you would be shocked at how ahead of the game you specifically are compared to other clients. Because like I could tell you, because I think you did a tax record with us. Like I'm guessing like that kind of at least puts your mind at ease. Like okay, at least I know what it is on the worst end. I know it's not going to be more than this. Now, Brandon, if you won the lottery, all bets are off.
Uh, yeah.
Uh,
I think I mean that pretty much answers everything I had. Like I said, I appreciate y'all doing this. It definitely
yeah,
helps me learn some stuff along the way.
you got it.
Good,
Yeah,
exactly. And
thank you
yeah,
for coming out tonight to attend. Yeah, we did one last year as well. It was around the same time. It was kind of middle November-ish, somewhere in there last year as well. I think we had maybe 10 or 12 people show up. This year we had around that many people sign up. Obviously, as you could tell, not everybody showed up. It is what it is. But yeah, no, thank you, Brandon, as well for trusting us
or
on,
we just
on
answer everybody's
recommendations.
questions.
That too, because we're just so perfect. But no, Brandon, thank
I
you
would say
for
so.
trusting us and working with us already this year. So yeah, and then attending tonight. So good. Glad we can help. But yeah,
Yeah, I think other than that, Drew, I think I'll let you take us home.
well, that's what I was gonna say. Is Bethany? I guess we'll give you the last shot. Did you have a tax question that you wanted to ask, or anything while we're here?
This isn't really like a tax question, but I was just gonna say you guys do an
I know
awesome
I'm the
job.
best. Oh,
No, but like as far as like, how you don't put tons of bullet points up on your slides and like you guys make this super interesting and like very interactive compared to like what a lot of people do.
Oh,
So,
good. Thank you.
yeah,
Thank
nice
you.
work. I did actually have one question, and this
Hmm.
kind of goes back to like as far as organizing like
mhm,
your kind of expenses in QuickBooks.
mhm,
So, like for example, let's say I wanted to pay for some stuff ahead of time for my big race in April that I'm doing.
mhm.
Um, could I have like a category of like, could I just, would it be like just reimbursable expenses or like, do I put it specific to like April trip or like how would that work?
Yeah, great question. So kind of like back to what Brandon said is in terms of taxes, the IRS doesn't care if it's a prepay that's just did the money leave your account, and it really matters, it's what that bottom line is. Now, from an organization standpoint, I think it's a great idea to give it a unique name. Like for example, as Drew said, we went to a conference this last it was last month. I was gonna say last
Like a
year.
month ago, I think. Yeah, it was in October.
Yeah, it was last month, and obviously that's just advertising. But we actually created a sub account under advertising that said Trusted Restorer Conference because we would want to be able to look back in a year and say, all right, how much did we spend on conferences? And I don't have to like sift through advertising, like, damn, I gotta go through this. Because again, it's more internal for us. On a tax return, it just goes to advertising. So Bethany, to yours is you can create a special account, so you just kind of like, so you know, oh, that's what I paid for it. Just like make a note to yourself. But in terms of taxes, you can just put it to travel. I mean, it's just, just there. But yeah, that's how I would do it again. And QuickBooks is more, that's internal use. As a tax accountant, I can tell you, as Drew will say in our tax directions, I'm just looking at the bottom line. I don't really care that much what's in travel. Now, obviously, I will, if I say, like, man, Brandon, you spent $300,000 on travel. That's a lot. Are you sure? Like, it's something like crazy, but like, I'm not going to beat up the P&L. Is that in the auditing world? That's what we call it. I'm not going to beat it up or anything like that.
Okay,
Oh,
sounds good. Thanks.
yeah. Oh, great question though. Man, I think that's all that we had. So, Drew, if you want to take us home.
Yeah, you got it. Yeah, just like I said, thank you guys for being here tonight to, join us and ask your questions. And, jokingly, I know everyone loves to talk about taxes and accounting
I do.
on their off time. Yeah, it's funny when we call people and I ask them like, "Oh, is there anything else we can do?" And a lot of times they say no, and I'm like, "Oh, come on, are you telling me you're not just talking taxes and debating tax law every day with your friends?" And of course, there's a chuckle. But yeah, so thank you guys for showing up, asking your questions, and yeah, this gives us accountants a way to interact with you, show you that we're not all shirt and tie like stuffy, and we're a little more relaxed. Try to be. So yeah, thank you guys for being here tonight, and yeah, for your business, whether you're, I guess, here or you're watching this in the future. But yeah, kind of like we say with all of our clients, is just we'll talk to you soon, and between now and then, go make money. That's it. And yeah, I'm not going to play any outro music because there's only a handful of people left. So yes, and plus we're just going to hit end anyway. So yeah, awesome. Well, thank you guys. Like always, if you need anything, shoot us a message in the portal. And yeah, we will talk to you soon. And go make money. See ya.
Appreciate it. Thanks, guys.